Really big month in the 200K portfolio, stock index portfolio 25, also in the 50K portfolio. These are the results: 63,115 per emini. The 50K portfolio trades 1 micro, so 10% of that, about 6,300. And the 200K portfolio trades 6 micros. So we're going to take a look now, as we did in March and April, the live versus hypotheticals in the stock index portfolio 25 setup. So if you're trading 6 micros, that's 37,869 on the hypotheticals. The actuals were 29,714. Typically, we were in March, we were up $2,000 ahead of the hypotheticals. In April, we were down about $2,000 against the hypotheticals, so kind of a wash. And this month, there's about an $8,000 difference, and this is not something that I like, and I'm disappointed in that. But there are things sometimes out of our control. We had additional slippage, but the main reason was data differences, and I want to show you that. The NYSE TICK is a data metric that we use that tracks the number of stocks in an uptick minus those in a downtick on the NYSE. And this column is on the research platform. These columns are on the servers platform. And column S shows you the difference between the closing values from the same data source on 2 different platforms. The differences should be 0. We've had differences all month. We've had missing data. Working with Tradestation's data integrity and a data science visualization to show differences throughout the month of May, line these data sets up, and show you where there's missing data and how it affected some of our trades. So there were days when the research platform showed winning trades while the server platform showed losing trades. And then when you do a deep dive, you might see a few minutes of data missing on the desktop, the research platform. So once that's fixed, the hypotheticals may go down a little bit and match the server, because the server seems to have more accurate data, while the research platform, even though I refresh the data, still has some inaccurate data sets and has results that are better than the live. And so we may back adjust these values. These values right here, 63,115, that might go down once we resolve this data issue. This is part 1 of live versus hypotheticals. Our live results will not change. They're 29,714. But once we resolve the data differences between the live server and the desktop, these numbers the hypotheticals may go down and come closer to the hypotheticals. And we'll have a part 2. Like I said, I'm working on a data visualization, working with data integrity at Tradestation to see if I can get that data to match. And I have not seen this before. Every now and then you can get a data difference in a different trade, but this was very constant and frequent, and it affected many of our strategies that use the NYSE TICK in the month of May, and we are working on that as we go into June. This portfolio calculator has been uploaded, and you'll see the results through June the 1st. And in the month of May, we saw the largest winning day in the program and the largest losing day, pretty much back to back. And last Thursday, we had a massive run up. So in the month of May, how many equity peaks do we have? We have 1, 2, 3, 4, 5 equity peaks. And so this was a huge gain right here. And then we had our largest losing day after our largest gain. And so we might need to do some volatility adjustments and contract sizing if this type of volatility continues. It's deceptive because the daily ranges and the VIX don't indicate that we should have higher volatility in our equity curve. And so there is more price movement in the short term in this time period. This really benefited us, though. If you look at the results for the last 4 days of May, you see plus $31,000 in gain per E-mini. So in spite of this huge loss right here at the end, that puts you in a $26,000 drawdown, these 2 days you were up 58,000. So up 58,000 and then down 26,000. And so that's part of trading. And I'm still looking for a way to never have a drawdown and a losing streak. I don't think that's not possible. That's holy grail chasing. So I'm being sarcastic when I say that, but we do want to make sure our winners are bigger than our losers, and if those winners continue to get larger and our losers also continue to get larger, it's probably prudent to trade less contracts per 200K. We might decrease the number of contracts per 200K if these numbers continue to increase. So I like the upside, but I don't like the volatility on the downside. So those are what I wanted to share with you. Once again, part 1 of live versus hypothetical. I may have an update for this, and the hypotheticals may be updated once the missing data differences are resolved. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.